Hi everyone, welcome to the Sky. Today we're gonna be talking with Privacy Smurf and Beam, two of our team members. We have a different topics. We're gonna be talking a little bit about global market happenings and how does it affect on crypto. We're gonna pull out a couple of charts. Here's a trading expert, Privacy Smurf. You see his face here. He looks like this in real life. Also, hi. Joking. And I'll give the word to two of you and to introduce yourself, maybe a couple of sentences to our community, and then we go straight to the thing. So, Smurf, you have the first word.
Hi, I'm Privacy Smurf. I'm just a crypto trader and analyst. I've been in the market the last 2 years, so I'm fairly new to crypto, but I've been trading commodities, stocks for just over 8 years now. Just what I do. That's all.
Great. Beam, the ball is on your side.
Oh, all right. I'm Beam. I'm just a developer. I've been trading crypto for the last 2 years. I love economic models and different systems and complexes. So I'd love to get into that today.
Great. So, guys, let's start to talk about the whole market conditions. We have seen the bitcoins dumping, stocks are dumping, the whole world is just going crazy with war and everything, and everyone is saying, okay, we're gonna see 10k Bitcoin, we're gonna see 5k Bitcoin. What's your opinion on the whole situation? Is it really something that they are scaring people off to buy cheap Bitcoin and then we go straight to 100k, or what is your side of view?
I mean, um, I think this is just like if you really pay attention to the flow of money and the flow of like resources, energies, everything in general, I think it's just a shift in like a time of huge like multi-year inflation to a shift of deflation. It's just um like the economy has a wavelength, right? And it was on its high and it's going to its low. So I mean, I see that this is natural, like with the interest rates, the rate hikes coming in, and the different complexes that come along with like energy. I think this contraction is natural. Like this is almost like a repeat of like the 1980s with the massive rate hikes, and what we're seeing now is just another repeat. The only thing that because if you pay attention to the dollar and how it's affecting multiple different markets, devaluing multiple different currencies, and if you just pay attention to a lot of things that are happening compared to what happened in the 1980s, we had Volcker, we had people really on top of inflation, on top of like the different situations that were happening. As of now, we're in a totally different situation with energy, the population itself, the workforce, and just like, of course, the administration. Because we definitely don't have a Volcker right now. We need one, but I don't think we're gonna get one.
Yeah, interesting view. You have gone really into global politics, economics, everything. It's really complicated right now. I believe nobody knows what is the next step. What's gonna be happening in Ukraine? What's happening with the dollar? Interest rates are going high. How high is
I mean,
is
if you okay, so if we're on a repeat of like the 1980s, if you pay attention to what happened in the 1980s, interest rates went to nearly what, like 15-16%. So if
yeah,
we do another
around
repeat,
that?
yeah, we might go around that or more, especially with how inflated the dollar supply is. M1, M, like it's not the situation is dire right now. But I think the fact of the matter is a lot of people aren't really grasping the situation we're in, because so interest rates are really just the power of the dollar. So a higher interest rate means the higher the power of the dollar, the more value that's coming to the dollar DXY. So when it hit what, 15-16%, we saw the dollar scale up to 163. It topped out around 163 in the 1980s. If we have that again, or it goes higher than the interest rates back then we're going to see the dollar probably rise past 163, which I don't want to see, because if we look at like the early 2000s, where the euro against the dollar hit about 80 cents, man, they don't have data, or
Yeah.
how I was looking around, we don't have data seeing that the dollar back around the 1980s during that peak interest rate hike. So I'd imagine like
Yeah,
it's
yeah.
gonna be an
That
interesting
scenario
moment.
that nobody wants to find out. Smurf, your point of view. You are the guy of numbers.
Um, so I do also agree with the sentiments that Beam was expressing, that the markets work in wavelengths. Like my primary focus of study is in cycle analysis, and it's sort of a niche field where we're applying the concepts of sound engineering and frequency analysis and applying that to different data series. So I very much am in line with the thought train that like the markets, move in patterns, repeating cyclical patterns, and like sort of like sine wave type movements. And through my analysis, like we recently across the board in the financial markets are at this like longer term cyclical peak, and like we're just seeing the reactions from that. Like I don't really think there needs to be much more explanation than just like we're experiencing like the longer term like market walking up and down.
Yeah, it's just a product of years of bad economic strategy from every side. But Beam mentioned, if the interest rates really gonna start to raise at those levels, I don't want to think about it at all, about two numbers, 10, 11, 12. We are right now at 3, or about, I don't know how much are we right now, about 3%, something like that. And it caused such a big effect. If you go to 7, 8%, 9, that would mean that Bitcoin is going to be on 5K, 4K, because the whole liquidity will be sucked out. Nobody can buy anything. You need to take money out of bank, but you need to pay 10% per year. That's almost crazy.
Yeah.
It may be
Go ahead.
possible, but at the same time, like the Bitcoin doesn't have to be related to like traditional markets. Like it doesn't have to be. It just like is at the moment. Like as like some of the things that are like interesting right now is like the narratives of, well, the repeating narratives of like not your keys, not your coins. Like we're seeing this flock from centralized custody because of like blowing up, because the people who are investing their money in what are supposed to be, or saving their money in what are supposed to be like safe, non-risky, like yield bearing accounts, were just being used for like risky yield returns. So like the flock from centralized agencies in custody like carry over into like the crypto like space. Like people, like for the most part, Bitcoin has been used as a risk on asset, but like if there have never been better narratives for people to just have a shit ton of Bitcoin. Like if there is insane inflation, like why not just hold fucking Bitcoin, So like if inflation and interest rates continue getting higher and just like debasing the value of the dollar, like, well, I mean, I think that's a perfect scenario for Bitcoin to decorrelate from
the market,
the traditional market. So like it doesn't necessarily have to go to 5,000. It only does if people can't realize the potential of like hedging from that market. because that exists in Bitcoin. That's why it was created in the first place. And just like right now, it's just being used as a risk asset.
Yeah, that's true. So like the decentralization of the asset itself into the holder's hands instead of the exchange's hands would probably aid in that help of like Bitcoin decoupling from like the financial market. Is that what you're saying?
Yeah, like I mean, like people talk about it in different ways, but like they talk about supply shocks and like liquidity in exchanges, and like if more people take coin off of exchanges and like it's only there to like buy and remove it, and like eventually they'll get to a point, like that's the theory that like it will get to a point where like there just isn't Bitcoin to sell, so like the price
But
go down.
big question. Do you really think that people are going to? Because it's really like the question of, the kid or whoever has to get burned in order to understand, okay, don't touch the stove. So do you think people will indicatively be like, okay, I need to stay away from this, protect myself? Or do you think it's going to be too late and they'll have to find out for themselves?
So in my conversations with people who have been around the space for a long time, I think the like prevailing theme is like the first cycle that someone's in, they basically lose everything, and then the second cycle, if they're still around and interested, they make lots of money. So like I think inevitably, like new people getting in will like get fleeced, and then after that they'll be like, oh, okay, I see how this works and like why it's good and why I should do this. Like not everyone becomes like Bitcoin maxis or whatever, but like. You can, like once you've been through the ups and downs, once you kind of understand the appeal and like the long-term thesis.
You need to be hammered down, so that's the thing.
Yeah.
In first year,
So
and then burn.
Yeah.
In your analogy, yeah, you gotta. I think most people will probably have to be burnt first because not everyone is smart enough to understand all this shit. And like, I mean, you can't be smart enough to understand everything. Like, there's just way too many things. Like, Bitcoin is governed by these small micro things and also like huge macro things, and the huge macro things are controlled by like huger macro things across every different like market type and like every different government and every different like incentive.
Like the Fed doesn't even understand like, okay, so like shadow banking is on the basis that banks basically hold most of like the liquidity in the world, like because of due to like depositing and like how the banking system works. Most of the money is contracted, like 92 to 96% is created in the banking system. So once you get into euro dollar flows, right? So like dollar or euro denominated debt in dollars, that's like the biggest flow in the world, or cash flow, I guess you could say. They don't even understand like the amount of money that goes through there. That's also why it's called shadow banking. So it's like for people to even understand what the federal government doesn't even understand or can't wrap their mind around, I think I don't know. That's crazy.
Last week or before a couple of weeks, Ray Dalio took $10 billion, I believe, and shorted the whole, let's say,
Europe.
DEX.
He did Europe.
DEX. It's about 50, I don't know, the best companies in Germany or Europe.
Yeah.
He shorted the whole thing, and when I saw that, I mean, in the next couple of days, Europe dropped 5%, or that's crazy.
Yeah.
It's like printing money out of thin air. I mean, taking from people, but only because you have information. And the same thing is happening in crypto, but on such shorter scale that you cannot even comprehend in matter of a days. That's happening. 10 years in stock market are maybe 1 year in a bull market. 1 month in a bull market, and that's the thing that the guy that jumps into market with I don't know $5,000 or 1,000, he said, I'm gonna find X 1,000X and make the money. He's wiped out after a couple of days. You really need to, you don't have information. You cannot get. You need to have a team in different fields, research, TA,
capital preservation. Yeah.
It's
also I think people need to teach people how to preserve their capital, because just like how you said, the guy who jumps in and just says, okay, I'm going to 100x at $5,000. He doesn't even understand the first thing in protecting his capital. So how is he going to even make the money if he can't protect himself?
Yeah, that's the thing.
There's a big absence of like a rational education in like
Yeah.
putting money into markets.
Yeah. I don't think anyone wants to even teach it, to be honest with you. Like, there's passive ways of making money, whether if you're airdrop hunting, especially you're in crypto. You're not in like the original financial system. There's so many different ways of making money. So it's like there are people out there who are also teaching it, or like, but they're a dime a dozen, you know. But you really have to go and say like to yourself, okay, how can I make money without having a huge financial drawback on myself? Especially since like a lot of people either are out of work, or they don't make a huge amount and they live paycheck to paycheck. I think that's the trend that most people need to understand and start learning. But again, probably going to have to get burnt for that to happen, but a lot of people can't afford to get burnt at this time, especially with like the CPI numbers coming out. And CPI is not even the real inflation. Like, it's not the actual inflation. So for it to just jump up like that percent, and then the market still like, oh, like the market rallied that day. I was just like, oh, like it dumped and then it just rallied, and I was like, oh, this is the type of market we're in, where they'll take pretty much anything and just run with it, just because how low the liquidity is in the market.
Smurf, I need definitely something like this from Snapchat. This face of yours, I really need. I'm looking at it. It's crazy.
Yeah,
These big eyes.
there's a program. There's a program called Snap Camera,
Snap.
and like I'm on a Mac, and like I can just install that program, and it'll run in the background, and I can just have Discord pull my video from that application. You can put on whatever filter you want.
It's great.
It's hilarious.
It's great.
Funny.
How many faces or heads do they have?
I don't know. I mean, people create tons of shit, you know? Like, there's just all sorts of stuff.
Is there any application where I could get maybe a Schwarzenegger body from his 40s?
I do not know.
That would be great. Okay, guys, we're gonna show a couple of charts maybe right now. We'll see when Privacy Smurf is ready. But the whole thing here, also in Europe, I'm from Europe here, and here is everyone, let's say, in panic mode. You have money, it's losing value like crazy from day to day. You cannot buy anything, you cannot take loan. People are trapped and they're panicking right now. And what I also have seen in the last weeks, months, all of the guys that had maybe $20,000-$30,000 spare money to invest somewhere, that money is getting smaller and smaller in the bag. And that's the thing. Through this inflation, they're covering their costs. They have the same living style with the same expenses, but they're earning maybe 10%, 20% through inflation less. And that's the part that they are taking from their savings. And I believe once when we really see that that the average Joe is left without money after 6 months, maybe 8 months from now, I believe that would be the biggest hit maybe for crypto. Because then and also that could be really this 6 to 9 months, this could be accumulation phase for the big whales, and they are calculating that, okay, after 1 year, 2 years, we are going out of this phase. Every Joe is going to be earning money. He will be investing again 3 years from now or something like that. Because unfortunately, that's how crypto works in every other market. Just my opinion on that, the whole situation. So I feel sorry for lots of people and my friends and everyone. I was talking with them before 2 years. I said, guys, buy anything you can. They are printing, and they announced we are going to print $4 trillion here in Europe. They printed 750 billions, and they said from 2021 to 25 they're going to be just sharing this money to all of those bankrupt countries in Europe, Italy, Greek, I don't know, Croatia, Spain, to bail them out. And that's not going to work. That's the real inflation if you do this.
That's called deficit spending. Like, the actual system is literally just a Ponzi scheme to itself, and I don't think people really understand that.
I'm not
because
sure.
that
Yeah.
Mm-hmm.
I'm just
that deficit spending.
I just wanted to say I'm not sure that euro as we know it today is going to be here in 3 to 5 years. I believe it's going to
Yeah,
completely disrupt because it's getting too much pressure from now. We are against Russia economically, and we are against dollar also to the debt side. We're getting hammered really right now.
yeah,
Yeah.
I agree.
Yeah. Smarf, I'm gonna put your chart out. I believe. Give me a second. Okay, now we see it.
Okay, so as we were talking about at the this, like I do most of my analysis. Well, the framework of my analysis is looking at cycles. This is gonna look really fucking messy right now, but the back here we have just like the price chart of Bitcoin on the daily time frame, and then I have these sort of lines underneath, and those are models that I created of they're models coming from the cycle analysis that I do. They show the potential directionality of price in the future, or a better explanation may be like the influence, the underlying influence on the market. So what's happening is the price over time data series is converted into a frequency basically, and an algorithm is looking at those wavelengths and creating models and testing which ones that appear in the data set are not random, so like they appear throughout like the entire data set, and it will extract those non-random frequencies, and I can mess around with the ones that show up and see which ones closely matched historical data. So like all these like light gray ones are historical data that it's like basically we're looking to find like the tops matching. Oh geez, sorry. We're trying to look for times where the top is like matching the bottom. So like up here, this cyclical peak matched with the topping of prices, and this low right here matched with like the cyclical lows of historical data. So like I sort of like I would trust this model's projection in the future because like in the past the data sets have like aligned well with like bottoms and tops. So like right now, like back here in October, November, December, like we were at like this peaking period in the market, and like I'm looking for like reasons to exit or whatnot. And like now we're at like this longer term like cyclical low, and like I'm sort of looking for a reason to be long in the market, because like if this cycle continues unabated, like we will have like an upwards influence or pressure on the market just based off of like that sine wave in the past. So like in these times, like I'm looking for a technical signal, like I'll be using RSI or some other trading methodology to enter into a trade. But like Bitcoin, since November, December, like this is a daily chart time frame. Like it's in like the bottoms of this longer cycle on the daily chart. And then this chart here is the 3-day time frame of the crypto, like the total crypto market cap, and the yellow is the daily cycle, and the blue is a weekly one. So like at this time back here, we were at the peak of a daily cycle and a weekly cycle, and now we're like entering the bottoming phase of one of the weekly cycles, which will be in alignment with a daily cycle. So like this whole end of this month into next month, I think we'll have like the most reason to be bullish, because like the historical fluctuations in the market are showing that like this will be a time when the market could be fluctuating both. Yeah, like a relief rally, and like matching this sort of thing with like a macro speculative perspective. Like since here, like since all the way back here in October, like commodities have been selling off like freaking crazy, like just so much. I mean, and if you go, let me see if I've got it on here. Sorry, I should have been more prepared. You go and look at. Oh God, this is loading really horribly. Yeah, if you go and look at the bond market. Oh no. Like if you go and look at the bond market, this is down here. This is the commitment of traders, and it's pulling out data from large investors, commercials, banks, central banks, showing that like during this whole like time, like over the past like year, they've been buying, like commercials have been buying bonds like it's cool, because they know ahead of time that like the market's going to turn to shit, because they're partly involved in the decisions that like make the market go to shit. So typically when you see a lot of buying over a long period of time, they are preparing for like they're traders just like us. Like they're buying bonds to protect themselves from the market, or they're buying because they're planning for a reason to sell in the future. So like they've been consistently buying over the past like year and a half, 2 years, and like they have to start selling this at some point. And what you'll see is like buying typically associated with some sort of move upwards into the future. Like this buying period here leads up to there, the market starts selling off, they start buying more. So like here again, and at some point in time, like this selling off in the like their hedging in the bond market is like them dumping their bags on retail. So like retail is like, this is a sort of a longer term perspective, but like right now they're still buying bonds. So like there's a reason to think that like no one's going to be in retail, no one's going to be buying bonds yet, because like there is like this potential relief rally. So like the commercials will continue buying bonds because retail's not buying them yet. And it'll be like after this relief rally when we have like weekly, monthly. Oh, sorry, this is a different chart. But the red is the monthly cycle, and we're on like this longer downturn monthly cycle until like early 2024. Like this is where I'm really getting off topic here, but this window of time right here, the late 2023, early 2024 turn, is where I think like the market will generally shift back to being a bullish market. Like this will be where the bottom of the bottom is, and also it's like the time frame when down all during through this point in time is going to be when like retail will start buying heavier into bonds. And the commercials will start hedging and selling most of their bonds, like all during like this phase right in here. But yeah, no, like there's just no reason. Like I like the idea of a relief rally because the bond market is still being bought by commercials. Retail's not that scared yet. There's enough technical signals to think that we are going higher. Like we have divergence on a shit ton of oscillators, like bullish divergence on oscillators where the price is going down, or it has been going down, but oscillators are going up. That suggests like a near-term rally. The cyclical forces right now are transitioning into like a short-term, like upwards phase. Like there's just I just don't think there will be like the big crash until like after Q3, Q4, and like during this time is when like we'll get the deeper sell-offs. This is an interesting chart as well. I got it off of Twitter. Some guy was talking about it. It's Bitcoin not denominated by just USD, but by the sum of US M3 and the euro dollarized M3 money supply. So Smurf, it's like Bitcoin.
I'm gonna jump in a little bit for our viewers that are not so technical as you, just to try to summarize the whole thing. So how I'm reading it from these charts. So we can expect some kind of a relief rally, and it might hit, if we look at the Bitcoin chart against USD dollar, about 30K, 28K, and that will be some kind of retest of a previous support. Now support zone. Now it's
Like
what?
most of the things are showing levels around the place that we lost back in May. Like the total crypto
What,
market cap showing
30,000 for like
showing
Bitcoin, right?
like a rally up to like 1.2, 1.25
Yeah.
of the total market cap, and then in Bitcoin up to like the 30K region, something like that.
Yeah.
And
I see a lot of different Wyckoff accumulation setups like that, or just Wyckoff in general.
But if we really retest 30K, that's gonna take a couple of weeks maybe. Then we dump down to again to retest 20K. And then if we drop really underneath, that's already 3 months gone. And then we are entering to this accumulation phase, I would say in between 10K and 20K. That could take 6 months. And then we are really on your 1 to 2 years until next.
It depends though, because a lot of the time in the market, usually when you get that upwards momentum takes much shorter amount of time than it does having consolidation or downward momentum.
Mm-hmm.
So it could just happen in like a week's time, to be honest with you.
Yeah. Also there's like the series of like low volume nodes and things like that. Like if you're looking at the chart, like there is very little time trading between like 23K and 26K. So like this area has not a lot of traded activity. So honestly, breaking above like 23K, like we can go straight from 23 to like 26 pretty quickly just because there's no history of traded price there. Like there's like I try to think of like my reasoning for making a trade based off of like value and incentive. There's like no reason for anyone to be a buyer or a seller right here because like there's nothing to go off of historically. Like there's no showing that like people want to sell at this level or buy at this level. So like why should price stop? Where like up here, if you're looking at like these ranges, like it's very clear that like people have been selling right here, people have been selling right here. Like this level around 21 to 22K shows as an incentivized location for sellers. Like there's a reason to sell at this level because people have sold there before. But like once we break that, there's no reason to make any choices. Like you're not benefiting anyone except for buyers at like 23K because like there's all this room to the upside. There's no reason to sell right here.
Yeah. So guys, don't get caught in the pump. Wait, see. I believe for next bullish wave we need really to break this 30K and then with some volume 30, 32K to go to 35 at least, and then we can say okay, we can expect some bullish momentum in next weeks or months that are coming. But until then, it's full bear. Also, guys,
I would be waiting for at least like over 32K to like even consider like those DJ moves, you know.
I agree. Guys, we are seeing here some alpha information. For all of you that don't know, follow the Privacy Smurf on his Twitter account. He also has a newsletter. You can get some crazy amount of information. Just subscribe and don't wait. Click that button. Yeah, now we can continue. This is also part of a video that we need to do.
Gotta forget to like sell ourselves.
yeah. This part with selling ourselves, we are gonna cut out, so no problem. So
no, it's great. It's good stuff.
Yeah. Great. Also for every new, don't be unhappy if we go into bear really 1 year, because if we pump right now, profiting are only those guys that are already holding the coins, and that's not you. Mostly retail investor is already selling, panic selling, or is in bad coins. Use this accumulation phase 3 to 6 or 9 months to DCA, dollar cost averaging, buy some coins, buy layer ones. Ethereum, of course, not financial advice. You need to do on your own responsibility, but that's the thing that we are going to be doing. And when we see really some bullish momentum above 35K, then you can start to make some risky moves. But until then, stay safe and don't do some crazy things. If you want to earn money in 5 days, you might get it, but it's 1 out of 1,000. So, and that one guy from 1,000 is mostly the guy that's already 5 years or 10 years in crypto and is spending 10 hours a day. So that's that one guy that nobody's telling you. So yeah, great. Oh, what do we have
if I
here?
could add something, if I could add something about that, we were talking about dollar cost averaging and stuff like that.
Of course.
This is a chart that I use to, what the heck? This is a chart that I use to like figure out where I should be focusing. It's very complicated, but it's sort of a more informative take on Bitcoin dominance, or a dominance chart. Like a lot of the assumptions that people make about dominance are, a lot of the assessments people make from looking at a dominance chart are assumptions and not necessarily true. Like just because dominance is increasing doesn't mean that altcoins are selling off. It literally just means that like money is moving into Bitcoin. Like there can still be plenty of times when money is going into Bitcoin and dominance is increasing, but money is also going into altcoins. It's just that more money is going into Bitcoin.
Yeah.
So like there are many times that like some of the common assumptions from that chart are like incorrect. So this is a chart looking at different sectors of the market. So you have like large caps, mid caps, and small caps denominated by Bitcoin. So what I'm looking for is which level of the market is like outperforming the other. So I have Ethereum relative to Bitcoin, and then each like sector of the market denominated by Bitcoin. And like like looking at the daily chart, like this line here is a 50-day EMA. Bitcoin's been below its 50-day EMA for like a long time, where Ethereum relative to Bitcoin has just crossed over. But like since June, large caps, mid caps, and small caps have been more bullish, and like I've been putting most of my focus into the mid caps because they've been showing the strongest performance over like this period of time. Like in late June into July, mid caps have been really outperforming relative to Bitcoin. So like this is where I've been looking at the stronger performing mid caps to like DCA into, because these potentially, when the market does turn back bullish, will have the strongest amount of growth, because during these bearish times they've been showing the most strength. Like small caps have like barely moved very much, and large caps are like starting to pick up now, which is like very typical, because when you have the market transitioning from bearish to bullish, typically the large caps will start to move first because people trust them, they're more safe, it's less risky. So like they'll get most of the money flow, and then that will rotate into the mid caps and the small caps after you sort of taken profit off of those like safer assets. So like I've been watching mid caps DCA into, and like paying attention to the large caps that are starting to move now. And once they start showing technical weakness, then that could be showing like rotation into like other mid caps and small caps. So yeah.
I've never seen this chart, really. It gives me completely another view on the whole situation. I was always following it, Bitcoin, Ethereum, then bigger caps, then mid caps, and then lower caps as it goes. But I understand what you're saying. They're much more flexible. They don't move. They don't need so much liquidity, but are also well known. Look, for example, Matic, Polygon.
Yeah.
It's
Yeah.
crazy.
Great.
It dumps like crazy on every Bitcoin dumps, and it's already back. It's around 130% from its low in less 2-3 weeks. It's crazy. If you catch that thing, you can double up your money. But as said, it has much more volatility than other coins. I don't know why is that, but that's as other coins that are on same liquidity level as itself.
Money flows.
Money flows.
It's all money flows. So you'd probably have to look at its volume, to be honest with you.
If you could switch maybe to daily chart or something, or I don't know. I know it was around 30 cents and it's now hitting 70. Yeah, look, this is crazy.
That's great. And like this down here, this indicator right there is Williams accumulation and distribution. It's sort of showing the transition, like, so the green or the red line down there at the bottom is Williams accumulation, and the top line of this thing is moving average of this. Oh my gosh. Sorry. This happened last time too.
No biggie.
Anyways, so the bottom line is Williams, and the top is the moving average of Williams. And Williams is basically showing accumulation or distribution. So it's buying or selling, like where there's more activity. And I use this as sort of a pseudo trend identification. So like when Williams is below its moving average, then like there's more selling pressure than there's buying pressure. And like recently, Matic made a switch like on the 13th to having more buying pressure than selling pressure. So like that's that's a good sign. Like I usually when that happens, I start looking for a technical signal to like make a long trade. And then all these lines up here are measuring divergence on a bunch of oscillators, and they've been showing like that over time, like since it started selling off, there's been more buying into the selling pressure. But I usually wait for like the RSI to start crossing back above the midline to actually act on those things. So like, I mean, there's targets up to like $1 for Matic right now in the short term.
That's crazy, and it could happen any day right now. It's trying to break out, and that's almost 3x, 3.5x on your if you catch the button. Of course, nobody can catch the really, but if you bought somewhere there about 35 cents, you can make 3x your money without some crazy trading. Just buy spot, sell spot at the beginning. Don't do some crazy trades, leverage trades. Leave that to profis at the beginning, at least. So Beam, I would like to come back to you. I have one question. It's pretty technical. It has nothing to do with price. We are seeing in the last weeks, months, everyone is saying, okay, blockchain is ready for public use, everything. Is there really something happening behind the scenes? Are we seeing some applications, some protocols that are really infiltrating real life? What's happening really on the technology side of a blockchain?
Well, I mean, you said for public use. Well, okay, so I mean, of course, during bear markets or just winters in general, there are more technology that's brought out because it's a builder's market, to be honest with you. I do see a lot of different protocols coming out, but rather it's moreover optimizing the protocols or software or programs that are already here, and they're pretty much spicing it up. So like one, I don't really like talking about it because it's like I don't want to say it's alpha or it's my alpha. It's just I like to keep stuff like that to myself. But one that's really getting me hyped is something called Viper, and Viper is a Pythonic Pythonic as a word just means that something is very Python like the programming language, and it's very Pythonic language, and it also is a really easy language compared to Solidity. So it compiles into the EVM, right? So it basically it's just like Solidity. It's just a language that basically does the same thing, but the language is much easier, just as Python is to understand and write. But get this, the gas content that it takes in, or like the gas at the end of the contract, is incredibly low. Like it's low versus most Solidity contracts. So if you're just programming in Viper, you can actually make contracts that are lower in general than using Solidity. It's also way more auditable, and I've been getting into it recently, and it's been just like mind blowing. Seriously, the Viper community is awesome too.
Great.
Yeah.
I mean, guys, we are already hitting maybe an hour in a call. We don't want to give all the informations on a day one.
Yeah.
So I mean, we're gonna make so many guys rich. So let's leave something for the next time. It was really
I think it's good.
a pleasure. And any closing words from two of you? As said, also we're gonna drop a link to Smars and Beam's Twitter account, follow us, and whoever is not following Sky Multi-Asset Finance, it's not gonna make it. So that's clear. So he need to leave crypto. So
I think the only closing sentiments that I would have as a trader in this market is like fret. Like, you can still make money in the bear market if you're trading. Just focus on your time frames and your preferred time frame and time horizon, and just trade whichever direction the market's going. And if you're an investor, fine, don't worry. Bitcoin has outlasted worse things than this. So
yeah,
good.
trend is your friend always. Beam, on your side, couple of words.
I don't think I really have anything much to say. Just concentrate on capital preservation and yeah, keep your head up, because when you're down in the dumps, you're not going to think right. Just clear your mind, and yeah.
Get rid of your emotions. They are your biggest enemy in this market. That's really, yeah.
Also, try and just stay active. Like, it's really easy to like walk away during these times, but like if you do, you can miss out on like some of the best opportunities like for the future.
Yeah. Life-changing money is really here, but it's not in 1 or 2 days. Stay on board, stay active, and stay with Sky, stay with us. Guys, thanks one more time. Thank you for coming, and see you next time.